Welcome everyone to the Kendall Report, where I share my 40 years of experience to help you manage and protect your wealth. Don't forget to subscribe and like these videos so more folks like you can find them. The markets took a huge hit, down over 4%. Everybody came to the realization that now is the point in time where we're going to start to see things happen. There's hashtags going around on Twitter, "Don't pay your rent." Everybody thinks somehow you're putting America on pause, nobody's going to have to pay anything, and somehow it's all going to work going forward. This is the dislocation of capital that I've been talking about. It's like time. You can't get it back. When money stops flowing, it's just gone. As I've mentioned many times, there's a lot of things you just can't turn back on. Restaurants take anywhere from 30 to 60 days to turn back on. A lot of businesses, once they're shut down, lose employees. They got to rehire everybody. Maybe they didn't like their job before this happened, so they're going onward. Not just a pause or freeze, it is actually something much larger than that. Further evidence that we don't know what's going on yet. The ADP report came out today, and it showed only minus 27,000 jobs. Well, it hasn't hit yet. When you go into the next month out, I mentioned last night, by the time you get to May 5th, you're truly going to understand these decisions that have been made and their impact. At that point, everything will be revealed. It will be crystal clear. It's interesting here in Arizona, which we have one of the warmer states in the union, not only warm, but we have low humidity. We are one of the states with the least amount of coronavirus cases. We've had one of the fewer amount of deaths, and it doesn't appear to be spreading, but our governor decided to shut down the state and confine us to our homes. I've been talking about over the last several days this involuntary socialism. That's exactly what you're dealing with. How do you like the government telling you what you can do and what you can't do? You can't go out. You got a social distancing. All this stuff is just crazy. It's hard to believe that we're living in America right now. Like I've said before, this may be the best course. Maybe this will work, but that dislocation of capital when it comes to financial markets just won't disappear. There's no way to make it disappear. So as we go forward, things are going to get even crazier. The selling that we saw today is a reflection of those waves of uncertainty that I talked about several weeks ago. Everything looked good for 5 or 6 days. We saw this big, huge selling that came in the markets. I don't believe we're going to go to new lows. I think this will stabilize over the next day and a half. And by the time we get into next week, we'll start feeling better again for whatever reason, I'm not sure. In our current environment, emotions are telling one story and the technicals are telling another. We do have some vulnerability in the markets right now. I'll talk about that when we go through the technical section. But for most part, we should see a stabilization continuing over the next several sessions. We'll also start to see more of a social stability. This is my hope anyway, as people start to look forward to 30 days from now. There's no way they can hold this country back longer than what they already have done. Let's just hope for the best, stay safe, and let's take a look at the technicals and see what the story is being told there. Looking at the S&P futures, these are a best reflection of what's likely to happen over the next several days. Markets are up about 1.6% right now, suggesting that we are probably at a low. I mentioned that we were going to get a formation that was going to be a 335 or a 535. It looks like it's going to be 535. Suggests that today is likely to be the bottom of the three, and we will start a 5-day run. Still looking for those upward levels I've been talking about between 2760 and 2840. Let me illustrate more of this pattern. This is the first pattern. This is second, where we have the retracement. We went right to the 10-period moving average, and now we should rally up, and this leg could be very strong. And typically what we get here, there's two things that are likely to happen here. The pattern suggests that this next leg to the upside will be somewhat equal in length of the first wave. So that suggests that we're easily going to get up to as high as 28.50, even 29.20 on this next run up. So there's still more upside, and there's a critical number I'll talk about here in a minute, but this is the basic pattern that should unfold. This will be confirmed when we take out the highs that we rendered 3 days ago, and this is the likely pattern right here. We could see a slightly lower dip tomorrow, but the way markets are trading overnight, that doesn't look very likely right now. So expect today to be the beginning of the next leg up. There should be 5 bars to the upside, moving up toward this level I just mentioned, 28.50, 29.20 levels. Just a few general comments about treasuries. Still expect to see the 0.6 level hold. We should start to move back towards 0.75 over the next several days, but downward momentum is continued to be very heavy, suggesting that yields are not likely to rise very much. The gold market continues to waffle around this 1600 level. As I've mentioned several times, I don't see anything there to be concerned about as far as a new emerging trend. Crude oil has continued to maintain right around the $20 level. It appears that it's trying to put in a minor bottom and maybe move back to 23.25. A positive view in crude oil may be one of the primary driver in the fundamentals to move the equity markets higher. Even though most participants have been ignoring oil for the moment, it will come back into focus. This will complete the broadcast. Thanks for watching. We'll talk to you tomorrow night.